Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Waste Connections Inc. quarterly report. Waste Connections Inc. provides a comprehensive range of waste management services to various industries. The company's services include collection services for residential, commercial, municipal, industrial, and E&P customers, landfill disposal services, recycling services for various materials such as compost, cardboard, plastic containers, glass bottles, and metals transfer station operations that receive and transport waste by truck, rail, or barge, intermodal services for the rail haul movement of cargo and solid waste containers, E&P waste treatment, recovery, and disposal services, leasing services. These services cater to a wide range of customers across the United States and Canada. The stability in Waste Connections, Inc. WCN stock price over the past year can be attributed to a combination of factors. The company's consistent financial performance, including meeting or exceeding analyst expectations and increasing revenue by 11.19% in 2024, has contributed to its stable valuation. Additionally, the company's commitment to shareholder returns through dividend increases and strategic acquisitions has signaled confidence in its financial health. The waste management industry's inherent stability due to consistent demand for services also plays a role in Waste Connections' relatively stable stock performance. Analysts maintain a positive outlook on the company, with an average rating of strong buy and a 12-month stock price target suggesting an upside. This positive sentiment has likely helped prevent significant downward pressure on the stock. Overall, the lack of significant negative news, combined with ongoing positive operational updates and strategic growth initiatives, has contributed to Waste Connections' stable stock price over the past year. The primary drivers of revenue growth or decline can be identified through an analysis of the financial summary. Revenue growth is primarily driven by increases in commercial, residential, transfer, and E&P revenues, which rose by 10%, 4%, 9%, and 22% respectively. Additionally, acquisitions and price increases for solid waste services contributed to revenue growth. On the other hand, revenue decline was observed in landfill, recycling, intermodal, and other, and industrial and construction roll-off revenues, which decreased by 1%, 16%, 10%, and 3% respectively. These declines were likely due to market fluctuations or changes in customer behavior. Overall, the company's revenue growth is driven by a combination of organic growth and strategic acquisitions, while revenue decline is primarily attributed to decreases in specific revenue streams. Net income and profit margins. A shift in financial performance. The financial summary reveals a mixed picture of net income and profit margins for the 3 months and 9 months ended September 30, 2025. For the quarter, net income decreased by $21,775, while it increased by $4,480 for the 9-month period. This disparity can be attributed to various factors. Profit margins also experienced a decline, from 13.2% to 11.6% for the quarter, and from 12.2% to 11.5% for the 9 months. The reasons behind this decrease are not explicitly stated, but can be inferred from potential contributing factors such as increased landfill monitoring costs, corporate overhead, professional fees, and a rise in diesel fuel prices. These changes indicate that the company is facing challenges in maintaining its profit margins despite some growth in net income over the longer period. Further analysis would be necessary to understand the underlying causes of these shifts and their implications for future financial performance. The company is generating a significant positive operating cash flow, with a substantial increase of $197.2 million from the previous year. In 2025, the net cash provided by operating activities reached $1,857,190,000, indicating a strong financial performance and ability to generate cash from its core operations. This trend suggests that the company is on a stable footing financially. The company's debt level has indeed changed significantly over the past year. According to the financial summary, total liabilities increased from $11,957,455 to $12,689,127, while long-term borrowings rose by a substantial $416.6 million. This indicates that the company has taken on more debt. However, interest expenses have shown mixed results. While some sections of the report indicate decreases in interest expense, such as a -$1,929 decrease and a -$2,671 decrease. Others show increases, including a 39% increase from $26,999 to $37,677. Overall, it appears that the company's debt level has increased, but its interest expenses have not changed significantly. The company's financial performance varies across different regions. The Canada segment stands out as a top performer, achieving an impressive EBITDA margin of 45.7% in Q3 2025 and 45.3% for the year-to-date period. Similarly, the Central region also showed strong results, with margins of 36.4% and 35.8% respectively. On the other hand, the Mid-South and Eastern segments struggled to keep pace, recording EBITDA margins of 28.5% and 27.5% in Q3 2025, and 27.8% and 26.3% for the year-to-date period respectively. These regions underperformed compared to their counterparts, indicating areas that require improvement. Management's outlook and strategy overview. The company is focusing on niche markets through exclusive contracts, vertical integration, or asset positioning to achieve high market share. They aim to control the waste stream by providing collection services under exclusive arrangements. In terms of capital expenditures, the company expects to spend between $1.2 billion and $1.4 billion in 2025 for property and equipment. Management is confident that their cash reserves, revolving credit agreement, and operating funds will provide sufficient working capital for the foreseeable future. They anticipate a seasonal fluctuation of up to 10% in revenues due to quarterly variations. Additionally, they have hedged 40.5 million gallons of diesel fuel at fixed prices to mitigate potential price volatility. The company's financial summary reveals that it has engaged in both dividend payments and share buybacks. Specifically, the company has paid dividends, as noted on multiple pages of its financial reports, indicating a commitment to returning value to shareholders through cash distributions. Additionally, the company has also bought back shares, further demonstrating its efforts to enhance shareholder value by reducing the number of outstanding shares. That concludes the financial summary for Waste Connections Inc. Feel free to comment below, and I will be happy to answer them when possible.